Yo, what's going on, guys? This is going to be a video on how to do stop losses. So I think this is really important no matter what strategy you do, because it does especially go well along with ICT, but it also goes along with other strategies as well, no matter what you do, whether that be EMAs, levels, blah, 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 whatever. So I'm going to be mainly basing this on ICT, but I'll go into other strategies as well, like using levels and MACD, or not MACD, sorry. That's just random off my head. So like levels, fibs, and stuff like that. So first off, with ICT, so if we go to the 5 minute, I'm just going to go to an example of a play, let's say, and this is going to be very hypothetical, hindsight stuff, not nothing I would probably trade, but let's pretend this is an order block, even though this is not really an order block I would take, okay? So let's pretend this is where you want to short, and this could be an order block, it could be a fair value gap, blah, 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 and let's say you're targeting here, okay? Well, your stop loss should be right above the recent swing high before the order block or fair value gap was created. So I'll put this line in red, and then I'll put this line in green. So the green's your target, the stop loss is your this red, okay? And the reason why this is the best stop loss is because so let's just do this real quick. We'll put the entry at the order block, and then we can do this. So the reason why the best stop loss is above the recent swing high, because you can kind of see how, like, sometimes the wick won't be as big as this. Like, obviously, if you went short, like, let's say this tiny fair value gap, okay? And this is not a time you should be trading anyways. This is like 4:30, really low volume stuff, so really bad trading time, but I'm just using an example. So let's say you go short on this small fair value gap, your stop would be above the swing high, and obviously this wick isn't as big as this wick, but the reason why the stop above the recent swing high is so good is because the chances that there's going to be a liquidity grab above, like, somewhere where it created a fair value gap is very slim, because that would mean it has to go through the fair value gap and then do a liquidity grab and then go down again, and that makes no sense. Why? Because there's probably so many leftover orders in the fair value gaps that it's unlikely going to reach that point anyways. So you can kind of see that this green candle before these 4 down moves, this is a pretty significant order block. The chance that it's going to break through this order block and go to this swing high is very unlikely. So that's why your stop loss should be above an order block or a fair value gap, okay? And there's a few different ways to place stop losses with fair value gaps and order blocks, okay? So in this example right here, here's your stop loss, the high, okay? And this is your target, so I'm going to make the target green. Why is this a target? Well, this is sell side, okay? And then your stop loss is up here. And let's make this red. And the reason why the stop loss is better up here is because, again, we have this giant fair value gap. Look how big of a candle this dumps, okay? You can clearly see the chance that it will go through this fair value gap and then above this and then dump again is very, very slim, okay? Usually you short the fair value gap and your target is down here. So the chances of that happening is very slim. There's so many leftover contracts you're waiting to be filled that, again, that's very, very unlikely to happen. So yeah, and there is 2 types of stop losses. So this is just a normal stop loss, okay? And if you are taking trades, I believe the best risk to reward ratio is at least 2 to 1, maybe 1.5 to 1 is decent. But if you're taking trades, try to make sure that the swing high and your trades is at least a 1.5 in my opinion, okay? So obviously the target would be down here because it's the sell side. This is the most recent swing low, and it's also equal lows right below, okay, right here, and they actually pan out just under. So lots of liquidity under here, and try to make sure the trades you take, try to make sure your stop loss is tight. And what I mean by that is if this fair value gap formed down here, okay, and the recent swing high is way up here, well, that means the risk reward is so bad. Your stop loss is going to be way too big, so you want to make sure the fair value gap and the trade entry is kind of near a swing low or swing high. So like an example of this would be like right here, this is really bad risk reward. Why? Because technically the stop loss is way down here, and like there's not really a good stop loss in this scenario. If we go to the 3-minute chart real quick, I guess you can say your stop loss is below this order block. So what I'll do sometimes is if there's no like obvious recent swing low that's even close to near where I'm trying to enter, I'll just look for an order block in a smaller time frame. So when I was in the 5-minute time frame, you can look, there was no order block. But if I go to the 3-minute time frame, then it makes your risk reward a little better, but still not the greatest. Obviously, the risk reward would be something like this. Let's just say it's under there, and like there's probably a high from way over here. I'm not gonna try to find right now. Let's say it was like up here, but you can see the risk reward gets a little better. But again, this is really risky, especially because this is an order block, I guess, stop loss. So there's two ways to play stop loss. One would be below swing low, okay? And again, you don't want to take these trades, these fair value gap trades, if the swing low is this far down. So that's when you kind of use the second stop loss strategy, which means you go to the smart time frame, or maybe it is on the time frame you're on, and you do your stop loss below order block, which would be the red candle before the up move, which would be right there. So that's probably a smart way to do it. Yeah, so like another scenario would be like again right here. If you went long right here, this is the swing low. See how? So here, I'm going to show you something. So in this example, see how we have an obvious low created right here from this fair value gap? Like technically in the bigger time frame, the swing low would be here, but in this one we actually kind of have better structure. So we make a high, and then boom, we get a higher high, higher high, and then a lower high. So that's our 3 candle setup where we get a swing high, and then look, a low, lower low, and then higher low. That's another swing low right there. So again, your stop loss to be right here, and it is kind of an order block, but not quite. It's kind of more of a doji candle, which I don't really like using for order blocks, but your stop loss basically right here would be right here. But in the example that I showed you guys previously, right here, let me go to the 5-minute again. The example right here, there's not really an identified swing low all the way up here. So really be picky with your setups. Only look for setups where it has identified structure, like identified order block. So this on the 5-minute would be the order block. So your stop would be right here, okay? And let's see if it matches up with the 3-minute real quick. So it does match up with the 3-minute structure, so this would be a great stop loss, okay? So this is the 5-minute order block as well as the 3-minute swing low. This is a stop loss instead of way down here, okay? So that is how I usually place my stops. I will never take a trade. Let's say we had a fair value gap right here and we had no obvious swing low or swing high right here. I'll never just slap a fair value gap up here, especially being that technically in the bigger time frame, this isn't really in discount at the time. It just almost hit discount, but it didn't. But the smaller time frame, yeah, it is in discount. But I prefer the bigger time frame little to make sure that everything lines up with everything, if that makes sense. So just don't be slapping fair value gaps way up in premium, especially when there's no identified structure where there's a good stop loss. Before taking a trade, ask yourself, is there an order block where I can place a stop, or is there a obvious swing low that I can place a stop, etc. So I think that's really important. So like right here, there's this fair value gap, which is way in premium, okay? And your risk reward is going to be, look, there's no identified structure in between these candles, okay? There's just a single order block down here, and then the order block is literally at the swing low. So your stop loss would be below the swing low in the order block right there. But you can see, why would you take this trade? Like, look how bad the risk reward is. You're literally entering premium, which is just something ICT says not to do, and your stop loss is way down here. So this is a terrible trade entry. Make sure you're looking for fair value gaps right above solid order blocks, or fair value gaps right above swing lows, okay? And obviously in this example we bounced in this one, so you probably would have wanted to enter in this one, which would have been a way better risk reward. But as you can see, we don't get an entry, but that's okay sometimes because you're going to save yourself money not chasing these fair value gaps. So yeah, that's how I do mine. Like right here, look, we have fair value gap. Look how good the risk reward is. This fair value gap is right above a swing low. So your long position, like I don't even know what happens to the right of this chart, nor do I care because I'm not trying to prove you can make money with these hindsight setups because I would not have taken this. But like, look how good the risk reward is. Like a 2-to-1. Look, is only you enter at the 959. There's a 3-point stop loss and a 6-point take profit. And I'm guessing the take profit would have been would be way higher than this anyway. This is just an example. I'd probably be up here or something like that, which would be a 5-to-1 or 4.5-to-1, blah blah blah. So these are the best fair value gaps to take, not these ones way in premium in my opinion, because your risk reward is going to be really bad in those. In this setup here, you can kind of see we have a fair value gap right here, and yeah, it technically works. Actually, we just hit the high. We never passed high, and there's a defined order block. So if you longed in this fair value gap, you would have gotten out right there. But look, we ended up dumping below. So if you took a heavier position, expecting to go way higher, you're gonna lose this trade. So that's why you have to wait till we get to the smaller time or higher time frame discount. And you don't have to be right above an order block or like a swing low or something like that. So that's really important. And in this example that I just showed you guys, as you can see, we have 1, 2, 3, 4 fair value gaps, and then we have an order block right here, a nice 5-minute one. But how do you know which fair value gap to take? Well, that's when you draw your fib. And in this example, I would say this is a defined enough low. Yes, you could draw from here, and you would see that it does go and discount the bigger time frame. But again, you could draw from here too, and I bet you this is like the 0.705. Yeah, so it's a 0.705 as well. And then you have a defined order block right here, so your stop would be below this, which would be below the 0.705 and below this order block. So the chances of it coming below here make it very probable that this trade is going to lose anyway, so it's good you got stopped out. So that's how I kind of use my stop losses. I look for defined order blocks, and I look for swing lows and swing highs where I take the fair value gap around. I never take a fair value gap if there's not a really well clean defined order block above or below it, and I don't take fair value gaps if they're not close to a swing high or swing low, or else that means my stop is going to be way too loose or way too high. So yeah, that's what I do. If you guys have any questions, let me know. I think stop losses can be very tricky, and obviously there's going to be some trades where you're just going to have a 3-point stop loss, like right here, and your target's going to be up here, and let's say you entered at 3956, but it goes to 3952, and you're going to get stopped in these trades, even though technically the stop should be over here. But let's say you did enter there, then your stop, if you had a true stop, it would be like a 7-point stop, which 7-point stop is bigger than what I use. I prefer 3 to 4, so I look for trades where there's legitimately like a 3.4 stop, 3 to 4 point stop, which means the swing low has to be 3 or 4 points under only, can't be any more. And yeah, that's just how I trade. But yeah, on this trade, like I probably would have been stopped if I entered here. I know I didn't enter this trade though because I saw we had the fair value gap here as well. But yeah, as you guys can see, it's going to depend on your risk management, what you're comfortable with. I've been on stopping the trades before where they end up ripping because I don't have like a proper ICT stop below the swing low. So yeah, even if you're using like EMAs, let's say this is like an EMA right here. Where's the brush? 1 second. Okay, let's say this is like an EMA, and we're riding the EMA. Well, my stop loss would probably be, you could either be closed under the EMA, like a 5-minute at least, or it could just be below the swing low. I think swing lows are the best because sometimes they'll go under the EMA, then pop up because that's how you get liquidity. So yeah, I would definitely backtest and experiment with it. Paper trading on this is a really good feature to use, or TOS on demand. But yeah, you'll have to do options with that probably. But again, let me know if you have any questions. But that should be my only. That's kind of my whole video on stop losses. Something I still need to work on is stop losses with position sizing, meaning like if I enter here and I see the swing low is 6 points below, well, that means I'm going to decrease my contract amount for, like, let's say I always have a 100-point drawdown, okay? And let's say there's a 6-point stop. Well, that means I might take 3 cons instead of, oh, if there's a 2-point stop, I would take like 6 cons. But same position size. I think that's really important. I can definitely go over a video on that in the future. But if you're just trading the same contracts every time, you don't really care about the position size, which is a bad way to trade in my opinion, but some people do it and are fine, then I would definitely just recommend doing the stop loss below the swing low. So that's all I got for you guys tonight. Make sure to ask me questions in my Discord. The new month of Patreon is starting soon. I have 20 wins and 1 loss so far this month. Some are scalps, some are decent, like 10 to 15 trades. So up to you whether you want to join. Alerts won't save you, as I've said a million times. But yeah, other than that, peace out.